Hello students, you are the future chartered accountants of India. First of all, very happy new year to all. We wish you all to have a prosperous life ahead. Because past is past, you cannot control that. Future is uncertain. You can also not in a position to control that. What you can control is today's time. If you utilize your best time of today, then there will be more brightful future for you, right? So, first of all, welcoming you for today's classes, that is Abhi CA Classes. I am CA Abhijith Acharya, welcoming you for today's video, today's classes. First of all, we need to know there are some chapters which have been categorized under A, B, C categories. So, what do you mean by A, B, C categories? A and B categories chapters are those chapters for which you need to revise for at least 3 to 4 times. C category chapters are those chapters which are less important, which need 2 times revision is enough for them. So how do you get to know that which chapters are A, B, C category chapters? We'll notify you as and when we initiate our chapters, as and when we start our new chapter, we'll notify you which this chapter is related to which category. Let me clarify you this chapter, that is chapter number 1, basics, is categorized as C category. That is less important from exam perspective. It doesn't mean that you have to ignore this chapter, because this is a foundation chapter. From if you understand this foundation, if you build your foundation strongly, then only you can build your another parts of your building, right? This is very important for your upcoming knowledge with regard to direct taxation. Without wasting further time, all the best for you. You can make actually we have already provided the concise notes. You can make best utilize of it by you can pause the video, you can take a snap of this, and you can actually whatever as your wish. Okay, let's start today's first class. All the best, have a stay in the game. Okay, next, meaning of tax. First of all, we need to know the meaning of tax. The cost of living in a society. It is a cost of living in a society. Okay, this is like the cost. Next, types of cost. There are 2 types: direct taxation, indirect taxation. Indirect taxation you might have seen in real world. For example, when you go to the mall or your DMart, they provide you invoice for whatever you purchase, right? In that GST is mentioned. This is called indirect taxation concept. This is levied on the goods and services. It can be recovered from another person in the form of input tax credit. What do you mean by that? In brief, we will discuss that concept in direct taxation subject only. Let's say I am a trader. I have bought this pen from another person by paying, which cost 10 rupees plus 18% GST. I have paid him 11.8 rupees, and 1.8 is the tax amount that I have paid in respect of this person, this pen. When I am going to sell this pen to another end consumers, I will charge him 20 plus 18% GST. That I will collect 23.6 rupees from him, out of which 3.6 is the tax amount I need to pay to the government of India. But I have already paid 1.8 to the wholesaler, right? I can use as input tax credit from 3.6. The balance 1.8 can only be paid to the government of India in the form of GST. This is a simple concept. The example of indirect taxation concept is GST and custom duty. Simple. Direct taxation. Direct taxation in the sense that the name suggests, directly levied on income of a wealth of a person. It cannot be recovered from another person. Unlike GST, you cannot recover from another person. You have to bear your liability on your own. Income tax, example, income tax, tax on undisclosed foreign asset, etc. For example, let's say I am having a salary income on which I need to pay income tax liability to the government. I cannot recover from another person's, unlike the GST, right? So you have to pay your tax liability on your own. There is none other person, there is no other person that you can recover from that person, right? This is the direct taxation, directly. Okay. Next, who is having the power to levy the tax? 7th schedule, it can be asked in MCQ. 7th schedule to Article 246 contains 3 lists: union list, state list, and concurrent list. Union list, there are some items on which Parliament has the power to make the rules. Parliament. Next, under state list items, The respective state legislative has the power to make the rules, right? For example, Karnataka, Hyderabad, Telangana, next Uttar Pradesh, Madhya Pradesh, Jharkhand, etc. Respective state assembly, state legislature has the power to make the power. Next, concurrent list. Both state as well as parliament has the power to make their laws. Income tax, next very important is entry 82 of union list, that is list 1 in the 7th schedule to article 246, has given the power to parliament, because union list, no, parliament has the power to make the rules on income tax other than agriculture income. Very important, other than agriculture income, parliament has the power to make the rules on income tax subject under specified under union list entry 82. Simple. Next, going further, Income Tax Act 1961. The Act is 1961, enacted in 1961, extends to whole of India. There is no restriction. This is not applicable to this state. This is not applicable to this state. No, there is applicable to entire India. Okay. Next, proviso. Proviso means exception and conditions to the provisions contained. For example, some of the sections says these are the provisions to be followed. Proviso means this is exception. For example, Section 80GGB, 80GGC says that donations can be given, right? But political party. But the proviso to that section says that cannot be made through cash mode. This is a proviso. Provision says you can make. Proviso says you cannot make in through cash. Simple. Next, explanation. Explanation means gives a clarifications of the provisions contained in the sections. Simple clarification. Next, Finance Act. Finance Minister of Government of India introduces finance bill in every budget. For your examination, Finance Act of 2023 is applicable. Remember, keep in mind. Nirmala Sitaramji had introduced Finance Bill of 2023 on 1st February 2023. Upcoming budget is not applicable for your examination. For your examination, 23 February 1st, 2023 first is applicable for your examination. When that bill is approved from both parliament houses, then it will become Finance Act. Okay. The first schedule to Finance Act. There are 4 parts. Number 1. It says that part 1 says that rates applicable for current assessment year, that is Finance Act 23, rates for assessment year 23-24. Simple. Part 2 says that TDS concept we will discuss clearly in TDS chapter, tax deduction as source chapter, but as of now, just remember rates at which tax is deducted at source for current financial year. That is TDS rates for financial year 23-24, right? Next, part 3 says that rates for calculating income tax on salary income and computing the advance tax for financial year 23-24. Salary income ka tax kya hai, and also computing advance tax 2023, it also suggests under part 3. Part 4, it says how to compute the net agricultural income. This clearly says part 1, assessment year for 23-24. Part 2, the TDS rates 23-24. Part 3 says income tax for the salary income and the TDS certificate for salary income and computation of advance tax and 23-24. And part 4 says how to compute the net agricultural income. Next, income tax rules 1961 2 says the CBDT has the power to make the rules. CBDT has to make the rules. That Central Board of Direct Taxation has the power to make the rules. Okay. Difference between circulars and notifications. Very important from exam perspective. The circulars are issued by CBDT. Notification is issued by central government. Certification was issued for the purpose or to guide the officers, that is income tax officers and assessors. Notification is issued with the intentions to give effect to the provisions of the Act. Circulars is binding. Binding means it is applicable only on department, that is income tax department. Notification is applicable. Notification is binding on both income tax department as well as SSEs. SSEs in the sense we human beings and other individuals, other persons, other companies who are required to pay the income tax liability, who are responsible for paying the income tax liability to the government. Simple. This is the difference between circular and notification. Next, section 288A. Total income. This says that total income of the SSE should be rounded up to nearest multiple of 10. For example, after computing every income from there are 5 heads of income. Let's later we will discuss salary, house, property. There are after computing entire income, if your total income let's say is come around 17,317, then it should be rounded off to nearest multiple of rupees 10, that is 17,320. This is simple. For example, 17,314, 17,310. That's it. Simple, right? Next, 288B says that the same rule applicable for income tax liability. After computing tax liability on the taxation income by applying the respective tax rate that we will go in the upcoming slides, that also to be rounded off to the nearest multiple of 10. Let's say for example your tax liability is 1,539, then it should be rounded up to 1,540. If your tax return, if the tax liability is 1,514 or 513, it should be rounded up to 1,510. Simple. This is rounded off provision. Next, we'll see the definition of person under section 2, subsection 31. There are different categories of persons. First one, individual. Individual means either me and you, something. Individual, male, female, minor, unsound mind, deceased person. For minor and unsound person, guardian can also be named as individuals. For deceased person, the legal representative will be treated as person, individual in the case of deceased person. Okay. Next type of persons is HUF. You might have heard this name, Hindu undivided family. The members are called as co-personages. Very important from exam perspective. And head of the HUF is called Karta. The daughter of co-personal shall have an equal right over the assets and liabilities on income and losses of the HUF daughter, unlike the same as the son. However, other female members who are coming outside of the family, for example, wife of co-personer and daughter-in-law of co-personers, are not having the legal, not having any right over the assets. Okay. Next, there are two types of school of Hindu undivided. There is actually two types of Hindu law. There is one is Dayabhaga school, another is Mitakshara school. Dayabhaga school is prevailing only in West Bengal. It also says that no other family members is going to get any other right over the assets or liabilities or any other purpose of the HUF until the head of the Karta is alive. Whereas Mitakshara school is prevailing in the rest of India, for example, rest of the cities of rest of the states of India, apart from West Bengal, it says that one acquires right by his birth. When a person is born, from that point of time only he is getting the right over the HUF. That's it. Under Dayabhaga, until the head of the Karta is alive, he is not getting any right over the assets or anything. It is prevailing in West Bengal. Mitakshara, rest of other apart from West Bengal, other states of India, and one requires the right after his birth. Simple. Next, classes of company. Next, company category. Company, domestic company and foreign company. Domestic company means is further divided into two: Indian company and other company. There is one important code. Every Indian company is a domestic company. Every domestic company need not be an Indian company. How? Let's see. Indian company meanings is this having a registered office in India, is having formed and registered under 1956 Act and 2013 Act. Simple. Other company, even the foreign company can also become domestic company, in which situation those companies which has made arrangement for declaring and payment of dividend within India from the income chargeable to tax in India. Understanding, right? Made which has which who have made arrangement for declaring a dividend in India out of the income chargeable to India in tax in India, and hence it is considered as every Indian company is considered as domestic company, but every domestic company need not be an Indian company. And what is a foreign company? Apart from other than domestic company is called as domestic company. For example, foreign company which has not made a provision of arrangement for declaring a dividend in India, that will also become part of our foreign company. Simple. Next, firm category. Firm means LLP, limited liability under LLP Act 2008 and firm as per Partnership Act 1932. Simple. AOPs. AOPs means it's a group of persons. Any person, it's a formation of persons in the sense members can be an individual, company, firm, LLP, etc. Persons who are which is, has been established for common purpose. There should be a common purpose for which it has to be, actually it has been established, association persons. Whereas in board of individual means it's a group of only individuals can become the members, whereas AOPs any persons is a individual only can become the members of BOIs. There need not be any common will or intentions for this formation, but AOPs, the intention should be, the purpose should be must. Okay, simple. Local authority, municipal committee, the district could be municipal cooperative municipality, municipal corporation is there, no, like that. Artificial judicial person, these are not natural persons having they are having but a natural having a separate legal presence. For example, deities, goddesses, universities and bar councils. These also form a part of under persons. So these are all types of persons which may have come in your examinations purpose in the form of MCQ. Okay. Next, we'll see the difference between application of income and diversion of income. Application of income is it is not very important from exam perspective, but it is, you can remember the application of income, discharge of obligation after such income reaches the SSC. If the income reaches SSC, then it is being discharged. It is taxable for those who applies it. Okay, it is not taxable for those who have been applied it. This is taxable for those who have applied it. That's it. A is then diversion of income is diverted without knowing to anyone. Diverted before it reaches the SSC. In that case, it is not taxable in the person who has diverted it. It is taxable to person who has been diverted with that amount. Right? Understanding, right? Not important, but you have to keep in mind. Then the meaning of assessment year and previous year. First, we will discuss the meaning of previous year. Previous year means the year in which you have earned your income. For example, this is the current financial year 23-24, April 23 to March 24. In this, you have, let's say you have if you have earned any income, this year is called previous year. This need not be a 12 months durations, because let's say you have established your business on 1st July 2023, then your previous year will be 1st July 2023 to March 31st 2024. Only 9 months, right? But assessment year meaning is the year in which you are going to compute your income, you are going to pay taxes on your income earned during 23-24 is termed as assessment year. Assessment means computation, right? Right, say. For 23-24 previous year, assessment year is 24-25. It is always 12 months duration, tenure, right? But general rule that we have just discussed, income of previous year should be assessed in assessment year. But in the following 5 cases, that income earned during the previous year should be taxed, should be assessed in that previous year only. Which are all those cases? First one, shipping business of non-resident. It is mentioned as non-resident. That's residential status we are going to discuss in chapter 2, residential status. Shipping business of non-resident. That is, for example, non-resident came to India to trade by having some income, but he wants to go out of India. But assessing officer, in his discretion, assessing officer means income tax officer, in his opinion, that he is evading some of the taxes, then he can order that NR to pay the taxes on the income and during the year. What is my income in this case? 7.5% of the freight payable or paid. For example, freight payable paid is 100. 7.5 means 7.5 rupees on which you need to calculate the taxes. For let's say, for example, some of the amount will come around. Assessing officer can order him to pay that tax amount. Then only he is relieving from his liability. Then only he can leave India. That's it. Next, persons living in India, in the opinion of assessing officer, is about to leave India. One person is about to leave India with the intention to evade the taxes, then assessing officer can order that persons to pay the income tax on the income earned during that period. Then only he can relieve him from his liability. If a person is about to not, the intention is to not coming again in India, okay, mostly to evade the taxes. In the opinion of assessing officers, he can order to pay in that previous year only. As next, AOP is BOI AJP formed for a particular event. For example, some group of persons came together and formed a cracker business during the October and November season during the Diwali festival. And if the assessing officer is having the intention, having the discretion that for the rest of the month they are not having any other income, but they are going to tax, they are having only income during this peak season, income tax officer can order that association person BOI that AJP to make a payment of taxes amount for the income generated during that peak season. Right, simple. Next, person likely to transfer property to avoid the taxes. If in the opinion of assessing officer, if a person is likely to evade the taxes, likely to sell his assets to avoid the payment of any liability. For example, if he has sold some land or any urban land or any other house property, then if he is not ready to pay the income tax liability on that, because capital gain, right? This is called capital gain. Then he can order that persons to pay the taxes on that gain. Then only on that in the same period. Okay, this was for example. He is not in the intentions to pay in the upcoming years. If in the intention of assessing officer that he is not going to pay in the upcoming assessment year, then he can order him to pay now only. As discontinued business. If any business is discontinued, let's say in June 30th, 2023, with the intentions to evade the tax, then assessing officers can order that business proprietor to pay the taxes for 3 months, that is April to June, to pay the tax. Then only it is free from its discontinuance of business, right? Till now we have discussed basics of basics chapter. I hope you have understood the concepts. If you have not, then I will mention my LinkedIn profile, Instagram profile, and email ID. You can reach out to me. You can also mention your doubts in the comment section also, so that I am very excited to answer your questions or doubts or clarification, whatever it may be. I hope this video has made very interest in you, and if you like the video, please press the like button and share the videos to the n number of students. And if you are not subscribed, please subscribe to my YouTube channel, so that I am also be encouraged to make more interesting videos like more classes on this. And we'll meet you soon in the next classes. Till then, bye bye, signing off. See Abhijith Acharya, Abhi CA Classes.